And joining us now to share his commentary on the day's markets performance is Vik Sharma from Differential Capital. Vik, thanks so much for your time this afternoon. So the trade truce between China and the US hangs in the balance, with Trump not giving any direction on whether a deal will be reached or if he plans to extend that truce. Looking at markets, not much of a reaction. We are seeing a bit of a pullback. Are equities just moving past the day-to-day trade headlines?
Thanks, darling. Thanks for having me. I think this whole overhang of whether the Chinese tariffs probably will be put in place or will be extended. On top of it, next week you have the meeting with Putin, whether that war will end or not. And I think, markets are also digesting the fact that Trump has been quite hard on the consumers of Russia as well, in terms of, putting pressure on the Russian oil buyers. So I think, pretty much in terms of what you call as a little bit of a limbo mode before you kind of seek better direction. But as of now, tariffs still are the talk of the town when it comes to the equity markets.
A bit of a wait and see kind of mood playing out. We also have those inflation numbers out of the US tomorrow. So I guess it will be some uncertainty playing out when it comes to markets. There are also reports, Vik, that Nvidia and AMD have struck a deal with the White House. It said that both firms will give 15% of their chip revenue sales in China to the US government as a condition of receiving new export licenses. Trump seems to be getting his way. What have you made of those reports, Vik?
Yeah, I think the issue there is it sounds like that Trump is very worried about this technology getting leaked into China. China, as you know, is kind of known for reverse engineering everything. So he wants to have full control over what is being going in, what latest and greatest tech does China have access to. So that is why this export license has been created, and obviously they're taking their 15% cut out of it. I don't know if you saw Trump tweeted about the Intel CEO as well, that he's got some links to China as well. So it sounds like more of a defense mechanism where he wants that the technology should only be exported into China with some kind of traceability for the US. And I think that's why possibly there is that export license regime, and in return he's getting 15% out of it on every chip.
Yeah, let's move over to some local company news. Rainbow Chicken is pricing in a surge in earnings, expecting its bottom line to more than triple. The group has pointed to, amongst other things, higher sales volumes and lower expenses related to bird flu as well as load shedding. Just your analysis of that update. I think the last time I checked, it was up over 2%.
So essentially, I think if you look at the chicken industry, where they're coming from, they had issues with regards to avian flu. The load shedding clearly wasn't helping there. So they're lapping those costs. On top of it, Rainbow itself had changed its breed. So obviously they've introduced a new bird, which obviously helps them in terms of performing better in the chicken sector. They obviously introduced 2 shifts there. So it looks like the supply is constrained still a little bit, even though we've kind of opened the imports out of Brazil. Your underlying maize costs year over year are much lower. So if you're obviously delivering the volume, looks like chicken producer are definitely making money.
Now, from one update that's been really positive to one that's not so positive, Italtal, right? So yes, they are warning that earnings could be flat or could be up as much as 5%. Some pressure coming through on the top line as well. Does this just speak to what's currently playing out when it comes to the South African consumer? Particularly, maybe South African consumers are not looking to spend money on renovations just yet, and or perhaps spending their money on necessities.
Yeah, I think you've hit the nail on its head. Even though inflation has been quite lower, these kind of renovative projects probably are on the back burner for the SA consumer, and that's why probably Italtile's kind of seeing that pressure. I think essentials are always a priority, but potentially, you could see eventually the impacts of lower inflation, lower oil, feeding into discretionary spend. So I think it's just possibly a little too early in the cycle for Italtile to see, let's call it, the positive effects of consumer if it has to come through.
Yeah.
You'll probably start seeing them a lot more in the discretionary spending, your clothing retailers.
And I think we've also seen it in the likes of a cash build when they were out with an update too.
Sure.
Quite muted as well. So it seems like that sector as a whole is still under pressure, right?
Yeah, I think consumer kind of needs confidence that, these kind of, let's call it windfalls are sustainable for a longer period of time.
Yeah.
And, that windfall kind of stays with you even after you have indulged in that, what I call as, luxuries of life of spending money as a discretionary item. And once you obviously are quite confident in sustaining that windfall, that's when you take those big projects, and that is when the consumer is confident enough to kind of go ahead and spend that money in an Italtile or a cash build. It will possibly happen, hopefully in the second half of the year,
Yeah.
but right now probably we are on the early part of the cycle.
All right. It all goes back to economic growth, right? We need to start seeing that growth coming through, and perhaps we'll start seeing more people spend. Before we get into our clips, Growthpoint, one of the top performers today. Last time I checked, it was up close to 2%. Are markets responding to the changes in leadership? There seems to be confidence in the succession planning on that front.
100%. I mean, I think clearly, kind of a beacon of the SA property sector, Growthpoint. Now you at least know who the leadership is. It is kind of part of it was very well expected, and it is kind of good succession planning that somebody's coming internally. They've also looked out externally as well. So it's more the certainty of the same strategy would continue. It's more the certainty of that you would have somebody experienced from within who's taking over the reins, and I think the market is quite well versed with the STN de Klerk.
All right, before we move on to your stock pick, let's take a moment to touch on what your industry peers find interesting.
RCL Foods, it is one of the companies that was unbundled out of the Remgro stable, and also it was split from Rainbow. Rainbow Foods is a chicken business, which is sort of commodity and quite cyclical. RCL Foods does have a commodity element in the form of the sugar interest, but it also importantly has a groceries business. And they recently came with a trading update. The numbers look particularly good, sort of heads up around 15%. So it's trading on a historic P of about 6 times. We expect it to pay a good dividend, which will give it a good dividend yield. And I think the prospects are good for the overall portfolio in terms of earnings growth. We have seen the food manufacturers being fairly defensive and actually doing quite well. So I think the stock is a little bit sort of forgotten because it was partly unbundled out of Remgro, and it's just I think a good quality business at a very reasonable price. So this is a nice time to pick up stock when it's likely to declare a dividend in the short term as well. So a nice cheap entry point to a quality operation.
It used to be a mid-cap, it's now a small cap, Met-Air. So Met-Air put out a trading statement yesterday that was really, really solid. Not only did they guide for a really nice rebound to profitability, but one of the big key issues for them has been that the perception that they are supplying into the motor vehicle manufacturing industry into South Africa. That's their biggest client. Their biggest client actually is Toyota South Africa. But they indicated very clearly in that statement that none of their OEMs actually export to the US. So they are not directly impacted by tariffs, but I think that the market is discounting them being very much impacted by tariffs. Added to that, the balance sheet has been a bit of a pressure point for them, but importantly, they've restructured their debt, and they haven't breached any covenants in the last 6 months, which I think is great to the extent that they've actually been struggling over the last few years.
So Rowan and Chantal going for local counters, RCL Foods and Met-Air. Are these companies you see value in at the moment?
Yeah, thanks, Chantal. So essentially, yes. I mean, I think our systems are not flagging it, but I mean, I think just kind of from what I know, RCL Foods obviously want to become a little more of what you want to call as a predictable business, which has got good brands. So that is why they unbundled a chicken producer, which normally in equity parlance tends to have a lot more volatile earnings. It still has a sugar business, which is quite volatile. Then it has a bread business, and then it has a grocery business. So I think at 6.5, 6.8 times PE, what essentially the market is pricing in is that their branded goods businesses and bread baking businesses are of much lower value, assuming the sugar business should be valued at a single digit PE for a commodity producer. So yes, I mean, I think there is definitely some value in that forgotten business of RCL, especially when the other food counters have actually run. So your Tiger Brands, your AVI are trading at about 12.5, 13 times. Even if you take a discount for the brands that RCL has, I think 6.5 times does present a good opportunity. Metair is something, that I'm not very well versed with, but I mean, I was looking at their announcement yesterday. Yes, I think the positive part of it is balance sheet has been restructured. They were very focused on saying that they are not impacted by the US tariffs. It does look like an interesting opportunity, very local, which has been forgotten. So I think the PE your guest mentioned was quite enticing enough. Maybe I'll probably look into it
All
in
right.
more detail.
Okay, so you're not looking at it right now. What are you
No.
looking at? Where are you seeing opportunity at the moment?
Yeah. So in terms of our systems, where the opportunity has been flagged is, one of the asset managers in SA, Coronation Fund Managers. So everyone kind of knows about it. The issue in the savings industry has been there has been constant outflows, right? So kudos to Coronation. Last year they were able to offset those outflows with their investment performance. So technically looking at the market where it is right now, investment performance, even if they're performing in line with the market, should be good, which should stand them in good stead. Their recent update on their assets under management was actually higher, from where they reported last year, which looks to be positive. They're trading at about 7 times historic PE. I mean, they pay out a lot of their earnings. You're getting a 10% dividend yield. Essentially, their BE credentials have now been improved after a BE deal. So you could actually argue that they could see much better inflows now instead of outflows. But even if you don't see that, the business looks to be a lot more better prepared for any kind of eventuality that comes from outflows.
Yeah.
You've got a great dividend yield, and it's trading at 7 times PE. Looks like a good opportunity.
All right, Coronation looking enticing for you at the moment. Vik, unfortunately, we have to leave it there. Thanks so much for your time and sharing your insights of trade at midday. And that was Vik Sharma from Differential Capital.